Hey everyone, quick tax tip. If you're a crypto trader, for tax purposes, your crypto is treated as property, and depending on what tax bracket you fall in will determine the percentage of tax that you will owe on any capital gains from your taxable crypto activities. So what are taxable activities? I'm glad you asked. According to IRS rules, the 4 activities that are considered taxable events are 1, when you trade crypto for the US dollar, 2, when you trade one crypto for another, 3, when you spend crypto for goods and services. For example, if you have a Coinbase account, Coinbase allows you to have a debit card, which you can swipe. If you have money on your Coinbase, you can swipe for goods and services, right? So whenever you do that, that's considered a taxable event. Okay, the 4th way is if you earn crypto as a form of income. So if any of these events take place, you are required to let the IRS know, report on your taxes. If you don't report it and you happen to be audited, okay, they're going to request bank statements and things like that. So once they see that this type of activity is going on in your account and it was unreported, you're basically going to create an unnecessary problem for yourself. Okay, so my name is Tasha, and I'm a tax strategist and business consultant certified in tax and bookkeeping mastery for virtual currency. Follow for more tips.